QPON is unique in that it's a very simple, low cost and diversified exposure to floating rate bonds from major Australian banks. Being an ETF, it's tradable on the exchange and liquid. One of the key things that QPON offers that traditional fixed income investments haven't is that it mitigates the risk to rising interest rates that are inherent in traditional fixed coupon bonds. That means that it can historically offer greater capital stability to many investors and also potentially offer better rates than those available on cash and TDs. QPON offers a diversified exposure to a high quality basket of floating rate bonds from major Australian banks. The average credit rating of those bonds across the portfolio is A+, and they're all senior bonds in the capital structure. At least 80% of the bonds are over big four Australian banks, being ANZ, NAB, CBA and Westpac. The remaining 20% are over regional banks, including Macquarie Bank, and are added for diversification. One of the key benefits that this also allows is that it gives retail investors the opportunity to access bonds that normally trade in parcel sizes that are very large and wouldn't be available to the average investor to invest in. Traditionally, people investing in fixed income have done so for asset allocation purposes and diversification purposes in the portfolio and to earn a defensive income stream. One of the problems we're seeing at the moment is that we're in a historically low interest rate environment, and traditional fixed coupon bonds actually carry some capital risks. So in a rising interest rate environment, the capital value of fixed coupon bonds would generally fall. As an example, in the last 3 months of 2016, one of the major Australian fixed coupon bond indices actually lost the equivalent of about 22 months worth of expected total return when bond yields rallied in just the last 3 months of the year. So that gives investors some idea of the downside risks in rising rate environments that those fixed coupon bonds may hold. Absolutely. I mean, interest rates, they're inherently a difficult thing to predict, but if you look at where we're sitting in the interest rate cycle now, we are at all-time lows in the interest rate cycle in Australia. Now, that doesn't mean that it's impossible that we get perhaps one more cut, but the way we look at it is the risk of sustained long-term rises to rates are much greater than the risk of sustained further falls to rates. And so if you're sitting in a traditional fixed coupon bond investment, as most Australian bond investors would be, then you're exposing yourself to risk if interest rates do in fact rise from here, which is what we're starting to see in the US and around the world. So being able to mitigate that risk by investing instead in a floating rate bond, we think is quite attractive because it means that investors can actually still invest in that defensive income stream, but an income stream that doesn't hold the risk to capital of a fixed coupon bond, and one that allows the income return to actually grow as interest rates rise. There are two key ways that we see QPON being utilised in client portfolios. The first is for traditional asset allocation to fixed income investments, but without the risk inherent in a fixed coupon investment. So it allows you to allocate to fixed income, but to not be hurt by the risk of rising interest rates into the future. The second is as a very high capital stability investment, but one that potentially offers greater returns than cash or term deposits, and probably also offers better liquidity than is available in term deposits also, which allows investors to take advantage of market opportunities should they arise in other areas. So when you look at it, the core client groups that this would probably suit would be SMSFs, retirees and pre-retirees, and anyone just generally looking for a high degree of capital stability and a defensive income stream. QPON's really easy to gain access to. It trades on the ASX just like any other share under ticker QPON, Q for Queen, PON. So anyone who can buy a share, buy or sell a share, can buy or sell coupon. And it's priced at 22 basis points, which we think is very compelling from a management fee point of view.